Hello, fellow traders. 'Tis I, the Rumpled One. It's Tuesday, July the 9th. The year's 2019. Let's talk trading. Swing and a miss. Oh, I came up with that title subject in honor of the All-Star game tonight, Major League Baseball. I remember as a kid, I used to, really be into baseball, had all the baseball cards and knew all the players, watch the All Star game. But, over the years, things have changed, rules have changed, players changed, the game's changed. Just not the same. I guess that's part of getting old. You have that nostalgia for the old days. But the funny thing is, memory has a way of being really selective. But back to trading, swing and a miss. It comes back to the old woulda, coulda, shoulda. Shoulda, woulda, coulda. Yesterday, there was a really nice opportunity, and I missed it. If you look here on the euro yen on the daily chart, if you just use the high and low from the previous 2 days, you can see, I'll get this computer to act normal, this huge wick zone right here. And you see right there, it dipped in and came out. Well, you see, yesterday, price dipped back into that wick zone, giving a really nice opportunity to capture, a bunch of pips. Let's just put it that way. And I missed it. And the thing is, I didn't even swing at it. Actually, though, I didn't swing at it as in sitting in front of the computer. What I did was I had a pending buy order at 121.50. I was playing the round numbers. Well, it didn't quite get there, so I took a swing at it, but I missed it. The question is, are there any lessons to be learned in that? Well, what did I do right? Well, I analyzed this and I took the round number. Well, what I could have done instead was maybe place the pending buy limit order at maybe 121.55. But I thought I was being smart and I outsmarted myself, which I've done at least, a couple of times over the years. I say that tongue in cheek. It's been more than a couple. Point being is that you can see here, you can analyze a trade, you can put in your order, and you can just miss it just by a pip. You can miss it by a point actually, which is 1/10 of a pip. But, the thing is, I didn't lose, which is kind of important. And of course, when I did it, when I put that trade, I had my risk and money management set accordingly. So had I entered the trade and the price kept going down, I could have stopped out. It wouldn't have hurt me. So in this case, execution and performance, I have to say, maybe a better way of trading it would have been to put half the order in at 55, the other half in at, say, 45, which would have averaged me out at the 50. So sometimes what happens is we think in discrete numbers as opposed to thinking of a range. For example, could have placed a third of the order at this level, a third of the order at the bottom, and a third of the order in the middle. Or you could break it up any way you want. But had I done that, I would have at least been in partially, which is better than not being in at all. I still could have taken some profit. So that's just something you might be able to apply to your trading. So if you pick a level like I did and you look back across the chart, see if there's something else telling you, well, maybe you should, buy a little bit higher or buy a little bit lower in this particular case if you're going long. I mean, you can see it here, once again, here was another wick zone that lined up perfectly with this one here. And as you can see what happened next. And we had 1, 2, 3, I'll call them green even though they're white on the screen, in a row. And then you had a nice little reversal happening right here. But as always, money and risk management is very important. And for those just tuning in, the gap's filled. So if you didn't get in it, you missed it. There was another miss. And just remember, fellow traders, these videos are for educational purposes only, and your results may be different from mine. So seek your trading advice, your investment advice from an accredited, certified professional trading professional, right? That's what you should do. uh, you have to laugh because what is it? 95% of the uh, money managers don't even beat the index averages. So, like the Dow Jones or the S&P. So, just remember they're human too. As far as the buy zone, you can see we opened right here, 121.91. We had a short bias based on the pivot point and based on the weekly open down here. But the first signal was a long, few pips. You had another long here. Should have exited here had you entered here because it didn't even break the open, gave you a chance to profit. You can see here lower highs, lower highs. It's just not making it. And we haven't even had one short trigger, even though pivot point is just outside the short zone. And once again, looking at the daily, there's your 3 greens followed by a red. And you can see once again, just looking at this simple chart, just a couple of horizontal lines, it tells a story. And we've only got one pair with the range exceeding 100. So another sluggish, mediocre, uneventful trading day as far as range goes. But there's still money to be made. You just have to be smart and quick. Yes. And right here showing with the Einstein line, since I opened this trading profile, it gave one short trigger and it proved to be good for about 0.5 pips. And in a day when you only have a 28 pip range, 5 pips is almost 20% of the range. So, I mean, just take it, just capture it. And if you think about it, once again, using numbers, if something's averaging around 70 pips of range, if you take 7 pips, you just took 10% of the range. That's not a bad trade. So, a lot of times people poo poo at 5 pip trades, but, 5 pips is 10% or better of the range. I say you traded well, you traded profitably. So, once again, don't listen to people who are always bragging or trying to say that what you did wasn't good enough. Be your own critic, be your own judge. your own scorekeeper. In fact, keep your business. Make sure your business is your business and don't even tell other people about it. And you can see here once again frequency distribution of the range on H1 over the last 100 bars. I mean, 67 have been less than 100. Or, I'm sorry, have been less than 10 pips. Last 100 bars, H1 frequency distribution, euro yen, 67% has been less than 10. That's just something to ponder, think about as you trade. When are you going to take that profit? And as you can see here, a lackluster day. But still, it just seems more times than not, wherever it opens, it leaves that. It might return to it, but it's like in this case, it opened in here, left, and it's come back. So every 10 pips. So we had one here that didn't exit, had another one that didn't exit, but the rest of them, even if it goes by a point, it still exited. Not much, but it still counts. Oh, I wanted to show you, once again, frequency distribution here. So you can see 40 or less only happened 12% of the time. 50 or less was what, 28%. So you see here above 50, this is where most of the action's happening here on the euro yen. So this is also when you start to look for reversals. And I just wanted to show you this once again because I mentioned, 3 in a row reversal, 3 in a row reversal, 3 in a row reversal. And that was just a simple buzzard reversal. 3 or more bars of the same color. And I don't know why this is doing this. It's like I'm not using the mouse, I'm using the touchpad. And sometimes this touchpad on this computer just acts weird. But you can see here, 1, 2, 3 in a row. There was a reversal, but then it picked up 4, 5. Then we had that gap, only to come back down and then finally fill a couple days later. So, fellow traders, I don't know if you like to watch baseball or not. If you do, I hope you enjoy the game tonight. And as you trade, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks.